Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 9th of February, 2023. Thanks for tuning in to episode number 2410. Feels like only a couple days ago that we crossed the 2400 mark, and a number of episodes were already at 10. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the convergent trading pre-market summary sheet here, risk on. We have risk on sentiment. The Nasdaq is shooting higher. Nasdaq is being carried partly by Tesla, partly by Microsoft. Tesla's up 3%. They say it's a result of determination that accident in Houston was not caused by the car using its advanced features. It wasn't self-driving. Disney is up 6% as it cuts, I don't remember, it was like 7,000 jobs. Yeah, it's on here, 7,000 jobs, and is expecting to save $5.5 billion or something. So Disney's popping higher. We're just seeing, little flickers here and there. Overall, though, risk on. It was led by Europe this morning. The German CPI came in lower than expected. This is a key driver this morning. Fed's bargain effects of Fed's tightening have been substantial. Must stay course on reigning inflation. And then Google releases this AI engine for its searches and maps, and it choked. So Google took a bit of a beating yesterday. Twitter's also had some technical issues yesterday. So not too much on deck in terms of news. This morning, there's, again, inflation in Germany was at 8.7%, expected at 8.9, forecast 9.1. The prior is 8.6. So still, that's year on year. And then other than that, really, there's not much. Initial claims this morning came in at 196, which was slightly worse than 190,000 expected. Continuing claims 1.688 million versus 1.658 million, so a little bit worse than expected. The only key piece that we have today is the inflation rate out of China at 8:30 Eastern. Okay, so that's it for news. Looking at the statistics for the S&P, the stats for the S&P show 200,000 contracts traded. That's pretty much in line with what we would consider normal for this product. Inventory is 99% long. We've spent pretty much the entire session above the prior close and settle, and the point of controls are remaining at 41.58. Yesterday was around 41.50. So the S&P is not giving up these prices despite multiple attempts to push lower. Let's take a look at the charts here for a minute. Oh, and by the way, I do have an announcement for you. Oops. I'm not going to be here tomorrow. I'm putting on my biggest trade of the month. My biggest trade of the month is to jump on an airplane and not trade, not be here. So I'm leaving tomorrow, Friday the 10th, early in the morning to warmer climates, and I'll be gone until Tuesday evening. So I'll be back on Wednesday. So the next Trader Bite will be on Wednesday, the 14th. So no Trader Bite tomorrow, nor on Monday, nor on Tuesday. But we'll be back on Wednesday and rediscovering where we were. I'll keep an eye on the markets as I lay in a cabana somewhere, but I will not be commenting or trading or anything like that. Okay? So I wanted to make sure you knew that. So let's move on to the charts. Okay. So here's, the action has been pretty jarred. So we have the FOMC, we have the continuation. Then we have this day that was clearly responsive, went right to the TPO point of control and finished lower. This was a very bearish response. So this is where we started to talk about the 1090 balanced day. And then the next day kind of goes down and pushes all the way back to get back into the range. And then yesterday was an inside day with a B-shaped profile, but so that's a long liquidation profile. So we started at the upper end of the range and we pushed lower. If you recall yesterday, we talked about this. We were in between two really important areas, the 170 to the upside, and about 125 to the downside. So the expectation yesterday is that any attempt to push higher that fails targets 2450. If you recall, I talked about the 2450 yesterday, and basically we pushed down into 21 and a quarter. So there was a short setup there yesterday. That was the only real clean setup that I had, a short setup into the 2450, and it's one and done. Yesterday, unfortunately, the volatility is kind of falling off and the number of opportunities are not there as the market's kind of fighting this 4,100 to 4,200 range. This morning, the market has popped higher. So we are trading up here, this little dashed line that keeps moving. That's where we are today. That's where we are this morning, above value high. And we're at the upper end of the range this morning. Again, we had an inside day, and now the volume that went off below is acting as support. Okay, so we're kind of slowly creating this area that keeps showing up 45 to 50 or so. So this morning it looks like we may, given yesterday we didn't have any time framing. We had the time framing right now is neutral on the daily, and then today is very likely to breach the prior high, which was at 41.68. The overnight high is 70 and a quarter. But I got to tell you, I'm not in the camp of, oh my God, it's going to rip and it's going to go through the 4,200 all the way up to wherever. This is really struggling in both directions. There are job cuts which are bullish. Actually, they reduce the costs, the drag on the companies that have job cuts. They reduce the pressure of employment on the Fed. But overall, I think that the market's just undecided on what it wants to do. What it did, though, is it just held this 4,100, is unable to go down to 40.90 and revisit the areas down below and come back into this balance. So it's generating its own balance or new balance up here. So if we look at the TPO detail chart, this is what I talked about yesterday. We were opening yesterday right in between, and I talked about how this here is likely to be shut the door a little bit, this upper distribution, and the goal down here was 2450, which is what we hit right there. So this was almost perfectly executed yesterday. Given that it was an inside day, I'm going to incorporate this profile into the prior. Now we have a more pronounced, just as the profile is recreated, we have a pretty pronounced double distribution profile. This is a market that does not have consensus on price, and it keeps checking from the 41.70-75 down into now what is now the 40.35 area. It just keeps not 40.35, 41.35, 41.30. It keeps checking one side and the other, and if it moves up above here today and uses the 70-74 as a base, then it might push higher. But I believe that it'll likely dry up as it pushes higher, as we've seen. I just don't see how things have changed since the last time we were up here. So market will do what it does, so I'm okay with whatever it does, but it's just tough for me to be bullish up here given the obstacles and the risk overhang above. So here's the current action. This was yesterday, the push into 68, and then a squeeze down, the squeeze down through the 50. Big battle at the 50 here. Very tough area right here yesterday. Nice little pullback to the IB, and then a push down into the 24, our key target. The point of control, volume-wise, is down here at the prior settlement. So what does that mean for us this morning? I'm not feeling so great. So yesterday or today, I don't know if you noticed, but just really feeling tired. This morning, this was an impulse up from the European session. This was an impulse up from the European session. We've got a multi-distribution profile, and what we're doing is we're hanging on to these higher prices. So the auction is not complete. It looked like this might be a blow off the way it turned around and pushed lower. But overall, this looks like it is incomplete. We have a line in the sand, an LIS right there at the 55, yet again at the 56 really. It's this right here, 56, 57. If it pushes through and gives up the full session VWAP, then my job is to identify a risk-defined short back towards settlement, ideally. But really, if we get back through and push into the 40s, that would be nice. But that's my look onto the downside. I'm not saying that's the primary scenario. The primary scenario really is that it opens, tests down, impulses higher, takes care of the overnight high, pushes right into that naked settlement at 41.75 or so, consolidates, and then just holds steady here. This is the expected play today. I don't see, there is no catalyst. I don't see this blowing through and kind of pushing highs. It may do so. I can't read the future, but my expectation is it's not very likely. This would be scenario 2. The better opportunity, the bigger trade is to the downside. But like I said, it may not have it in it, and it may find it's very likely to find it much easier to go and take out the 41.70 and just continue higher to 75 or so. So that's where we stand this morning with the S&P. Look at the relative delta this morning here. Really very large and large lots below zero. And then the small lots above, and it's just basically sideways. So hang on a minute. Wait a minute. Hang on. Something's wrong. That's what's wrong. Gosh, I looked at this earlier and I'm like, that seems bizarre. Okay, now this makes sense. I apologize for that. So we had, I look at, when I'm doing homework, I'm looking at ES, CL, and Q. I'm in charge of the CL for convergence, so I'm focusing on that the most. And then I mess around with my charts and I forget to reset them once the show starts. Not much more to say. There's very little participation here on this big rally up. Again, this feeds into the same narrative that I had in mind anyway with the wrong chart, which is I'm not really expecting it to throttle up pretty strong. I may be wrong. I'm likely wrong. I don't know. But if you look at crude, for example, crude, by the way, what a beauty, crude. I mean, look at this thing. Hang on. Crude doing its thing. It's like it's such a technical trade. Yesterday, so our 77 in crude. So we went over the ES, just switching gears to crude. 77 in crude is a key over underline. It's been on our charts for a long time. Then we finish with a week high 2 days ago. We open up, we test that weak high from above, hold, very bullish. Remember, I've been bullish with crude all week. And then it pulls right back. Look at this baby. Just beautiful. Pulls right back on to the over under. So it opens, tests the next stock zone up. I did not change the stock zones. That stock zone has been there for 2 days at least. Tests from above and then pushes and closes near highs, giving us a nice little clean test of the 77 and a push back up, goes sideways. Then it gets turbulent. Then we have this impulse down in crude. But when you look at the relative delta in crude, it is phantom volume. Look at this relative delta. As crude shoots down, it really doesn't have much very large participation. I would expect that a move down like this in crude would have some panic selling. This is very, very controlled. To me, this is just a pullback. Crude is likely to test the 77 again, and we are likely to see it back at the 78.47 right back here at some point in the next day or so, if not today. I'm not buying I'm not on the side of these sellers here on crude. It cleanly rejected. This looks like a news event, but participation, if it is a news event, and it does seriously look like a news event, if it's a news event, where's the big money getting out, reshuffling their position? I don't see them on the tape at all. In fact, any big hitting at price has been absorbed on the way down. So I'm not buying this this sell-off here. It'll continue because technically you'll have people panicking out here. The crude has already opened up. It opened up and it has a symmetrical. It's symmetrical around the open and is testing the low side today. Not believing the selling in crude. So if we look at crude once again, it's making its way down to this level here. As long as it holds this, I expect crude to continue to push on its way to testing that 79.26 area, and then the 79.26 is key, and then the 70.80 something is its magnet up above. So that's where I see crude. This is I'm looking at this as a pullback, not an initiative move down overnight, because I don't see the participation in it. Anyway, I'll leave you with that. I don't have much more to say other than, again, a reminder, tomorrow I'm not going to be here. Won't be here Monday or Tuesday. We'll resume the show on Wednesday. Don't forget to hit the like button. Don't forget to subscribe to the channel. The link to subscribe to the channel is the one that is in chat here. It's ft71.com/YouTube. Takes you to the subscribe link. If you've already subscribed, stay subscribed. If not, then subscribe and hit the like button. Okay? Hopefully you have a very profitable day. Good luck.